being 8:30 on August 15th on Financial Audit Advisory Committee. And I thought actually.
Are we recording?
Yeah, are we recording? Okay. I just want to acknowledge that this committee hasn't met in a year. So I thought before we really got into the agenda, we might start with a little introduction, so all the members got to know who we were, and a little history on our town experience and financial experience. So I'll start. I am your select board representative, obviously chairing this committee. I was on the finance committee for 2 terms, and then I was on the light board for 2 terms. When I was on the light board, I was the financial advisory committee representative for 6 years. So I'll just note that. So go around, please.
I was on the finance committee for, I think, 1.5 years. And that's about it. I'm CPA by training. Lived in Concord for 37 years.
Great.
My name is Colleen Reiger. I'm the deputy treasurer collector for the town.
Mitch Lord, the town accountant. Previously, for about 13 years, I was assistant treasurer, and in March, I became a town accountant.
I'm Liz Rourke, the assistant CFO. I started in December, so I'm on the newer side, but I have 23 years of municipal experience in the finance world.
So I'm Anthony Asami, the town's CFO, treasurer. I have my whole career has been in the public sector. It's 35 years in total government. First 15 in state government, starting out as an auditor with the Department of Revenue, moving through there. And then the last 20 years working in local government, and I've been with the town now since October. So we have a relatively new finance team, and something that they've done a great job, and we have a lot going on. So I'm proud of the work that we're doing right now, and we're looking forward to the future and making the financial situation better for Concord.
Great.
Sounds like a good one.
Right, yeah, absolutely. Okay, so I'm sorry, go ahead.
Didn't even do that.
Yeah.
Cynthia Rainey, 6th year on the Concord School Committee. Prior to that, I had 2 terms on the Board of Assessors in Concord.
Great. And then Brian. Can't see who. Yeah, I can see Brian. Okay.
Good morning, Brian Watterson. Brian Watterson. I live in Carlisle. I've been in Carlisle for 8 years at this point. I am in my first year on the regional school committee. I'm on my 2nd year of the Carlisle School Committee. And I've participated in other groups in Carlisle as well, including affordable housing and our playground committee.
Great, thanks, Brian. Bianca, that's what we can't see.
Yeah. Hi. So this is I came onto the light board last year. So this is my first year, then serving on the audit committee representing the light board. By way of background, I have 20 years experience as a sovereign credit analyst. So I was looking at public finances, mostly at the national level. And also working in the financial markets with sovereign bonds. So I'm now transitioning. Hopefully we'll be able to bring that experience to bear and learn a lot in the process as well.
Great, thank you. I'll also just note that John Flaherty, who is not with us today, actually will join the committee, he's part of the committee, and is the former finance director, CFO of the school. So he has certainly some history and experience with the finances in town. So, okay, so with that, our second agenda item.
Wendy?
Yeah.
If I might.
Oh, sorry, Court. I'm sorry.
That's all right.
Write down everyone's list here. Yeah. Sorry, Court, go ahead.
Not a bit. I won't bring all the financial acumen to the committee that others do. I'm a educator, K-12 and university, and I was on this committee prior as a school committee rep on the finance audit committee, both for the CPS and the region. And I also have considerable nonprofit management experience. Those are some of the pieces of my background that I bring to the committee. So good morning, all.
Thanks, Court. Apologize for that.
Not a bit, no problem.
So someone will keep correcting me, and I take a vote to do that. I think that door
But,
needs to be- that-
Wendy,
That
just-
door needs to remain open,
Yeah.
because this is a public hearing. Sorry,
Just
Court?
one other matter, just protocol. Do we need to do a roll call, given that we're hybrid?
We will. Is that for opening the meeting? We have to, we don't have to for opening the meeting, but any vote we take, we will absolutely take a roll call vote.
Yeah.
Thank you.
Okay, right now we'll go to the second agenda item, which is public comments. I don't see any public here necessarily. I know Scott is here. Is there anybody online, since I clearly can't see up there very well?
Just have one person attending right now virtually. And if you want to speak, you can just
Yeah.
raise your hand. Other than that, I don't see anything else.
Okay. And who is that? Just,
Brett Fay.
okay, and so Brett, we just want to acknowledge that you're here, and your address. Do we need that for the minutes?
No.
Just the thing, okay,
Brett,
All right.
to say something.
okay. Okay,
No comment, just listening in for the first time.
okay, thank you.
No worries.
Appreciate you acknowledging your presence. Okay, so no comments. What we'll do at this time is now move on to the charge of the committee and the audit calendar. I wanted just to, I don't expect us to change the charter, but wanted to make sure that all the new members have read the charter and understand our duties. You know, the duties are pretty straightforward. Our main focus here is to review the audited financials and look for any internal control issues that are of concern. I will just note in the duties, there is a recognition that we are to participate in a presentation of the audits by the auditor at a public meeting of the select board and the regional school committee. I just want to acknowledge that in practice, this is the presentation of the auditors. The select board under the charge here is intending for us to do our due diligence and kick the tires on the audits and ask the tough questions. While this charter doesn't reflect that necessarily, I'm not inclined to change the charter right now to reflect that. I will acknowledge, and court will actually remember this, that in April of 2023, which was the last meeting I was unable to attend, the committee did have a discussion around the charter and whether it should change or were there changes needed. And the biggest acknowledgement there was really around membership and the terms of membership. And the theme there being two. One was that why don't we have someone from FinCom participating? And I think the idea there is that really what we want to have is a liaison here at FinCom. So I will outreach to FinCom and ask if they would participate. It is a good grounding and there's a wealth of information here that they should focus on. Granted, the FinCom is more focused on current finances going forward, but this is great background for a member of that committee. The second was a discussion around terms. So for all those who are appointee of a committee, including myself, the term is for 1 year. And it doesn't have to stay 1 year. I'll acknowledge that when I was on the light board, I was the appointee for 6 years. I do think there's value in having that continuity. So while each of the committee representatives are just 1 year, I would look to those committees to see if you can provide continuity. I think it's a good practice. And even as a select board member, I will speak to the select board about future meetings because it's important, I think. I'll also acknowledge that on the school committee, Court was the representative for both CPS and the region. And this year, well, maybe it was actually last year, the school committee chose to have 2 representatives, one for the public schools and one for the region, which is fine. Great training for someone to learn a little bit more about the finances. So the other acknowledgement I just wanted to have for this committee is that while I discussed sort of the presentation to the select board in the region, I am aware that at least for the light plant, this committee generally reviews the audited financials. Obviously, staff representation is part of that. This committee has in practice drafted a letter to the select board and the regional school committee around issues to be considered. I haven't been attending the school committees necessarily up until recently. I don't know if there's been historically a presentation of that letter or financial issues to the region. So I looked at Port and Cynthia, do you recall that occurring?
Well, they didn't occur last year. as we know.
Yeah, well, yeah.
Court, what is your, I don't remember. Formal
tip-
presentation.
Typically in the past, we did not make a formal presentation. I'm not even sure we provided physical copies of any memos coming out of this committee or from the auditor, but instead we were able to report out orally, and that's embedded in the minutes and in the videos as to the status of CPS and region through the auditor lens. So that did come up usually at whatever meeting followed a particular audit report that this committee had reviewed. So we did diligently bring it forward, but we didn't bring the entire set of audited statements forward for careful review.
Okay.
But always available, as you know.
Yeah, I just want this full committee to understand what that process is, so I appreciate that, Court. I do know that the light plan does typically go through a high level financial, the financials. And then the letter, if there's issues that have come out, so they review that. The select board, probably similar to the school committee, probably should hear issues from the letter, so I'll make sure that that occurs. I don't know that that's always occurred in the past, so,
No, I
but.
think it would be much better practice.
Yeah,
Right.
when
Yeah,
Wendy,
so-
if I might, the emphasis always was findings and recommendations. And as
Of
you say,
course.
the high level summary. Thank you.
Right, so, okay, that's helpful.
Mhm.
Okay, so, does everyone agree that for now, I think we'll leave the charter as is? I will make sure that as we go through a year's worth of work for the audit committee, that we do revisit the charter if there are additional changes to be made. Okay? All right, great. Well, still within this agenda, I next want to go to sort of just to orient members of the committee to our typical schedule of events for the audit, and I'll just acknowledge up front, we're a little behind right now as a town. But I want to ground you a little bit in what maybe an ideal practice is, but partly just to show you so that there's a series of events that happen around the audits. Anthony, is it helpful to bring up this graphic?
Yeah.
Either one, you doing that?
We actually have an updated chart that maybe we'll work off of.
Okay,
We propose that we can have a discussion on, and just for your,
Yep.
Carlin Reed from the FinCom is, I'm not sure, Carlin, are you the liaison to this committee?
it's kind of, okay. This is my vision.
Yeah, this is Carlin, Reed Finance Committee. We don't have one officially appointed at this time. However, I'll do my best to monitor whenever possible. Thank you.
Thanks.
Great, and Carlin, I will outreach to the chair of that committee because I do think it's valuable to formalize that if possible. But appreciate that you're here, Carlin, that's great.
I agree. Thank you.
Okay. Okay, so Anthony, you have a revised calendar, which just acknowledging, I haven't seen. Part of my goal of this is just understanding the typical schedule. And I also want to ask the schools whether there's any regulatory related requirements that we should be mindful of in terms of reporting out financials, but we can hold off on that. So, Anthony, do you want to speak to this?
So what we did, we put together this chart, and we did have some conversations with Scott yesterday, so what we would propose, and right now, just, let's focus just on the town and not see it all. But, you know, if we start from, let's start from where we are, or what we.
Are you thinking FY 24's audit at this point?
This is for FY 24.
Okay,
right?
okay, yep.
So in talking to Scott, we'd like to see the field work begin October, November. We'd like to have a draft report in December and a final report sometime in January. Then at that point, we can have this committee get together and review that. You draft out a letter, to have a draft of a letter to discuss, and then in March, present that to the select board. Scott, anything that was still an okay? Yeah.
Yes.
And one of the things that's always a little tricky here, and I know Carrie will remember this, we're always looking for that outside auditor to do the OPEB evaluation, right? So sometimes this might slip a little, I don't know, if
Little
it's
bit.
better this year in terms of getting those. Not been a problem.
It was
It
a
was.
few years ago. I think the OPEB issue, the timeliness of the reports are more current.
Okay,
I think
great.
it was
So we moved from the fiscal year to a January first valuation, I don't know, 3 years ago now,
Yes.
Okay,
to avoid that problem and to tie it to the retirement system
oh, great.
valuation.
So there's a, excellent, good. So I guess part of the heads up for this group, there will be a meeting in December, which is typically a pretty time to get meetings scheduled. So that's great. So that field work sounds good. Okay. All right, do we want to, the other thing I want to do at this point, just talk to the status of existing audits. So while we just talked about FY 24, today we're going to be reviewing FY 23. I just want to note in our agenda, you saw that there's a discussion on FY 22 for the town audit. This committee did review and approve the audit from FY 22, but there was never a drafting to the select board of those results. So we'll talk about that later in the agenda when we get there. The other two things I just want to acknowledge, we do have a CMLP audit that we're responsible for. I understand, Anthony, the FY 22. It's not FY. So just as a reminder, the life plant runs on a calendar year basis. The calendar year 22 audit was complete. The calendar year 23 audit, I don't, the status, there was a report being drafted, but I don't know the current status.
So,
Is it final?
you know, yes,
Sure.
Matt over at the Light Plan has been given a draft. It still needs a independent partner other than me to review it. It's just part of the quality control. So I would think within a couple of weeks that would be finalized.
I mention that only because this committee has two audits that review for the light plans. We might talk later on how we merge those together and how we do that efficiently. And then also I think we're in a similar situation with the regional audits. I believe the regional audit for fiscal year 22 was complete. And the FY 23 would be in process at this status, but maybe do you want to bring the calendar back up? Calendar, the region usually follows from the town historically, but I don't know what the status of the region's audits are.
Yeah,
Sure.
Scott.
Yeah, just,
The district also has a draft of the report, based on email I received earlier this morning. The partner external to me has gone through it, probably has a couple of questions for me. I didn't go into detail in general. Bottom line is I expect that report to be issued early part of next week.
okay, so we'll get later on the agenda, talk about our next meeting. It might be that we want to focus on the region, but
Yeah, so what our plan is for the next meeting, I worked with Scott on getting a date. We have September 11th as a good date for Scott to be available to go through both audits. DNLP and the regions, so I think the goal would be to have your second meeting to talk about the town. And then kick into the first meeting to discuss where Scott will present the audits for those two entities.
okay, so since we're jumping ahead, so that's sort of for audit. So for CMLP, it's calendar year 22 and 23, and then same for the region in one meeting. And so is that like a 2-hour meeting, we think?
Well, that depends.
Yes.
Right.
Yeah.
I don't mean to be
And
difficult,
yeah.
but it would be 3 audits, but I guess I've been doing this long enough that I would wonder whether or not how much value the committee would get from going through a 12/31/22 report.
Yeah.
When we'll also be talking about a 12/31/23 report.
Right. So I completely agree, and Anthony and I have talked about that we would like to merge those, and the only concern I have is making sure that the management letter issues for both years are talked explicitly, so we'll have some experience with that in this audit as well, so the purpose of that is just status, so we're close on both the region audits and then also the town. So it sounds like September 11th, now I'll just comment, and I need to just check on this. September 11th is great, but I'm gonna be remote and I'm gonna be up in Maine. I think I can still chair the meeting if I'm remote. So hopefully that will work. So we will plan on that. So are we also talking, since we're already on this agenda, September 11th, are we talking about a morning meeting since you've already?
So Terry just brought it to my attention, the light board meets at 7:30.
Is this a Wednesday?
On that date, so
Oh, yeah.
if we
Yeah.
can do that date, if we
But
could
not-
just push it back a little later, if it was. If the committee can be available, and Scott can be available, then perhaps we can start at 9,
That committee goes, technically could go to 9:30.
start at 9:30.
So, and John's not here, so let me. Do people know their calendars now? Do they? I don't know, Bruce, if you know yours. And check, like, we're all.
We just use that as a pencil in date
Yeah,
right now and then confirm that up later.
Okay, let's do that, because I'd like to make sure that John.
Sure.
doesn't- Okay, so September 11th, 9:30. Ideally, both outstanding audits at this point. Okay. Great, that's a lot to cover. Any questions on this audit schedule at all? I know we just went into planning. I just want to acknowledge that we historically, we can review a draft audit at some point. If there's some minor issues outstanding, that's okay. We can still proceed with a review. There's still time in a follow-up meeting to finalize that though needed. Okay. All right, so let's move on to our main, well, actually, we have one more agenda item. We have a set of minutes from May 9th that need to be reviewed. Again, acknowledging we have a brand new committee here with all new members. Court is the only member of that committee that was present on May 9th. I will acknowledge that I actually did review that recording and I am prepared to vote on that. Other members can choose to abstain, but I would like to take a vote on these minutes. But let me first ask, do people have comments or questions on minutes? Okay, I'm not hearing any comments. Can I entertain a motion for approval of the May 9th meeting?
So moved.
Is there a second?
Second,
Thank you, that was Bruce. Okay, so now we're gonna do a roll call vote. Cynthia?
Aye.
Myself, Wendy Romelli, aye.
Aye.
Bruce, Court,
aye.
Bianca,
I guess I'll abstain since I wasn't present.
okay, and Brian.
Abstain as well.
Okay, great. All right, so we have, but so from, we have three approvals. So they are approved. Thank you, and we'll get those posted. All right, now our main center of attraction is our FY23 audit. Scott, do you want to come up to the table? And introduce yourself. I know I'm very familiar with you, but come up here. And I'll also just acknowledge, this is a lot of content that was put together, as it always is. I know I printed out pieces of it. And Anthony, thank you for getting the materials out a week in advance so that we have sufficient time to review. Very helpful. I might request in the future a full printed copy of this, but we can consider it. All right, Scott.
Thank you. Good morning. My name is Scott McIntyre. I'm one of the partners at Markham LLP CPAs. As Wendy alluded to, I've addressed this committee now for a number of years, including last May. Your prior year financial statements were issued by the firm of Melanson, which is the legacy, I call it the legacy firm that I was with for 35 years. In January of 23, we merged with Markham. Pretty sure I would have told the committee last May, but there's many new members here. We merged with a national firm because no one's going into public accounting anymore. Looking at a fellow CPA over here, he probably knows what I'm talking about. And we needed the additional resources. It's been a little challenging first year, but I think in the end, having the additional resources is going to make us a better firm and allow us to continue to do what we do, which is audit cities, towns, and school districts, counties in the Commonwealth of Massachusetts, as well as New England as a whole. I'll certainly take any questions that anyone may have, any committee members may have on the switch to Markham. Like I said, it's set us back a little bit in year one. One of the reasons why we're probably here in August, as opposed to last year it was May. Anthony and I did talk about the calendar that was up on the screen earlier. And I think that that's a very realistic calendar. There's a lot going on here in the community. I think ultimately the goal would be to finalize the town's ACFR in the month of December, within 6 months of year end. But I think in this first year, not this first year, but with the munis conversion you have going on, I think a draft in December and finalizing in the first of the calendar year is a reasonable step towards improving the timeliness of the financial reporting. So with that, I can tell by looking around, and Wendy alluded to it, not everyone has the whole document. I'm okay with that. I'm prepared to talk about main results of the audit, and then some of the numbers. There's a number of reports that Anthony put in the packet. I think they go in the order of what I call the governance letter. We in my profession call it the governance letter because our professional standards require that we report certain things to those charged with governance. That's the phrase that's in the professional standards. If somebody did have the whole packet, it's the first page you come to that has our Markham letterhead, maybe 6 or 7 pages into the packet that Anthony put on that circulated around. Again, this is the governance letter. It tells you how our audit went. It tells you all the things that are required by our professional standards. In my opinion, the audit went well. We did not need to propose any significant audit entries. The estimates that we look at as significant estimates in your financial statements are listed out there. The key ones are your net pension liability, your net OPEB liability, the related deferred inflows and deferred outflows, and the expenses related to those key liabilities are all significant estimates, but they are based on actuarial professional standards. Auditors have standards, actuaries have professional standards that they must follow as well. Certainly, the estimated useful life of your capital assets is an estimate. Any allowance for uncollectibles is also a significant estimate. We've reviewed all those estimates in terms of pension and OPEB. We also audit the assumptions that are used, including the discount rate, and some of the other key assumptions that go into those liabilities. We found your assumptions to be, sound, consistent with most communities here in the Commonwealth of Massachusetts, and arguably, I would say they're appropriately conservative. Some of our clients are a little more aggressive than Concord, and auditors like things to be conservative as possible. Also, if anyone's following along, on the bottom of page 2 of the governance letter, there's a couple of bullet items there. I just want to point those out. Those are significant risks that we identified through our planning process. Those significant risks are potential override by management of your internal control structure, and significant risk is also the revenue being recognized in an improper fiscal year. As I suspect the gentleman to my left knows, those two risks are not only were they identified in Concord, they are identified in every single audit that takes place, whether it's a governmental audit, PCAOB, publicly traded company. Professional standards require that those always, pardon me, I can't say always, because you can minimize the risk, but in general, those two risks are identified as significant risks in virtually every audit that occurs, not just Concord, not just governments here in Massachusetts, but all financial statement audits. So nothing of concern there. Also, in the governance letter, there's a paragraph on independence. We are an independent entity from the town. Something new this year that related to that we are required to disclose is any non-audit services that we provide. The audit is an attest function. What we do with Concord, as we do with virtually all of our clients throughout New England, is we assist in the preparation of the ACFR. Technically, that is considered a non-audit service, and as a result, our professional standards require me to disclose that to you. At the end of the governance letter, there's a series of pages which are, journal entries that were made during the process. There's a couple in there that we call adjusting journal entries. Usually that's a classification between transfers and either revenues and expenditures. Everything else that's in there, are what we refer to as reclassification entries. And then there's a different category of entries called GASB entries. Concord, like all communities in the Commonwealth, you keep your books and records in accordance with the provisions provided by Department of Revenue, Division of Local Standard, Division of Local Services, different than GAAP. Those GASB entries are essentially us taking the town's long-term assets and long-term liabilities and converting your books and records to the accrual basis of accounting for your governmental activities. For those that have heard me speak before, that's the long-term perspective financial statements, not just the general fund or the short-term perspective, as well as your enterprise funds. Your enterprise funds are also kept in the same basis of accounting that is prescribed by the Department of Revenue. Yet those are required under generally accepted accounting principles to be reported on the accrual basis. So there's a lot of entries there. There's nothing in there that, in my opinion, the community should be concerned about. They're virtually all reclassification entries and GASB entries, which again, help you convert from your basis of accounting that the state requires you to keep your general ledger at over to generally accepted accounting principles or GAAP. I'd like to jump forward several pages in Anthony's attachment. It's the second letter. It may be about 12 or 14 pages into the package. It's the second one that comes on Markham's letterhead. I refer to this as the Yellow Book report. The title of it at the very top. I'm not going to read the whole thing, but it ends with the phrase "Government Auditing Standards." I guess it's old school for me to call this the Yellow Book report because years ago, government auditing standards were published literally in a book that was yellow. And so the phrase Yellow Book is still quite commonly used today. This is required because you are a recipient of federal funds. And in here we are required by standards to indicate any material weaknesses or significant deficiencies that we found in your internal control. Similar to last year, the town does need to improve its reconciliation of water and sewer receivables. We have cited that as a significant deficiency. There are really 3 levels of recommendation that auditors make. Control deficiencies or just simple management level recommendations. One step up from that is a significant deficiency, and up from that is a material weakness, which gratefully we don't need to be talking about material weaknesses today. But we did classify that recommendation, that issue as a significant deficiency. And as noted, the town has a lot going on with computer conversions and addressing the continued weakness in the reconciliation of water and sewer receivables should be put on a par with the conversion. And I included in here is the town's response, and I think the town's response is appropriate under the circumstances. So that takes us to your ACFR. ACFR is an acronym for Annual Comprehensive Financial Report. Carrie's laughing at me because I've been talking about these things forever, and I just literally couldn't think of how to. I say ACFR all the time. It's the Annual Comprehensive Financial Report. It goes above and beyond, particularly since there's some new members of the committee. It goes above and beyond the basic requirements of your financial statements. If you were to just prepare what I refer to as basic financial statements, they might be 80, 85 pages. But because Concord chooses to do an ACFR, in most communities that are rated similar to Concord do an ACFR, you go above and beyond the basic financial requirements. Your report head includes a introductory letter that tells you about the community, the profile of the community, and it works into the basic financial statements, the required supplementary information, and then what we call SI or supplementary information, which includes combining schedules from all your non-major governmental funds. And the last section is the statistical section, which includes 10 years worth of trend analysis on, in general, it's 10 years worth of trend analysis on many different key financial numbers, as well as FTEs and things like that. A lot of good information about the community. But the highlight of the whole ACFR, in my opinion, Anthony, Carrie, you may disagree, but is the independent auditor's report. This is what you hire us to do. And based on the auditing standards that we follow, which were part of United States generally accepted auditing standards and generally accepted government auditing standards, or as I mentioned before, the yellow book. Based on applying our procedures in accordance with those standards, in our opinions, your financial statements are materially fairly presented in accordance with generally accepted accounting principles here in the United States. Nothing new there, but with some new members of the committee, I just wanted to highlight it. In general, or oftentimes it's thought of as a clean independent auditor's report. That's not wrong to call it that. Technically, in our profession, we call it unmodified. Our opinion is not modified in any way, shape, or form. In other words, in our opinion, your financial statements are materially fairly presented in accordance with generally accepted accounting principle. Following that, and again, it will be print pages 15 through 21 is your management's discussion and analysis. Great resource to go back to at a later point in time to understand why key account balances may have changed. And I will go back to those that maybe have a hard copy of it or can find it online. I will go back and talk about one page in there, sort of as I wrap up talking about the financial statements. But after MD&A, the first page that you come to is the long-term perspective.
Can you bring it up, Anthony? Can you say it's gonna be helpful for people just to keep track of where we're at? Because I know you're gonna flip the pages.
Well, I was going to minimize that because not everybody has it, and you know, so following the MD&A is the town's statement of net position. And that would be print pages 25 and 26. 26 would be the page to have up if possible. In page 25 and 26 is your long-term perspective. We'll get to talking about the short term and the general fund in just a few minutes. On print page 26 of the statement of net position, the key account balances here in that first column of numbers are right in the middle of the page. They are your net pension and your net OPEB liability. In our professional opinion, no conversation about a local government financial statements is complete without at least discussing these two key account balances. In Concord, in general, I will say that your funding percentages, both for your pension liability and your OPEB liability, is better than most. Although these financial statements are as of June 30, 2023, your net OPEB, your net pension liability is measured as of 12/31/22. That's it's certainly permissible. And we had a funding percentage of about 87%. The year before, it was around 100%. So it dropped because interest earnings to the contributory retirement system here in Concord in calendar year 22 were significantly less than expected. Think about what happened in the market in calendar 22. Your plan and everybody else's plan that I've been involved with took a hit, if you will, and kept from the results of operations in 2022. But nonetheless, you would still have a funding ratio in accordance with the accounting standards of about 87%. Key things to think about with your pension liability is that you use a discount rate. You are using a discount rate of 6.5. That's a nice conservative discount rate. I think that's where PERAC, the state oversight agency, likes to see governments. There are a number of governments that push it at 7. Some are still pushing it at 7.25. I think 6.5 in my professional opinion is appropriate. And certainly, you know, it's your earnings, your historical earnings support the use of that 6.5% discount rate. The other liability right below there, the net OPEB liability of just under $20 million. That is measured as of June 30, 2023. It may be based, as Kerry indicated earlier, on a valuation that's dated earlier than that, but they roll forward the information a little bit so that the measurement date of the liability is consistent with the town's fiscal year end of June 30th. Funding ratio there is about 6%. 6%, pardon me, 61%. 61%, pardon me. And with your OPEB liability, which is your GASB 75 liability, you're using a discount rate of 7%. You previously had 6 3/4. You went up to 7%. The earnings of that plan, in our opinion, also support a 7% discount rate, because life to date, the earnings on the plan have exceeded what is estimated. They're essentially right on, but cumulatively, the earnings of the plan exceed the expected earnings based on the discount rate. Certainly, the discount rate, as I indicated, can change each year, but based, on fiscal year 23 and the application of a 7% discount rate, you still met that earnings expectation. So all I was really going to talk about on the government-wide or the long-term perspective financial statements, maybe Anthony or Liz, if you could scroll down and say one more thing. Because oftentimes, certainly in the Commonwealth of Massachusetts, people look in that first column of number and they look at the third number up from the bottom, and they see the unrestricted net position of, in parentheses, indicating that the liabilities outweigh the assets and other fund balance or net position restrictions by just under $12 million. I do not view that as problematic. Some view it as that's certainly far less than our combined pension and OPEB liability. I'm not sure that's the best way to look at it, but it's certainly a very common methodology to look at it. One more thing, just talking about the pension and OPEB liabilities, it's important to remember, and I should have talked about this when I was talking about those liabilities, is both of those are on a funding schedule. The PERAC for the retirement liability, PERAC approves you, issues you a funding schedule, and it's scheduled to be funded. Anthony can give the exact year certainly within the guidelines of Massachusetts general law, it will be fully funded. So in other words, if you keep doing what you're doing, or certainly the assumptions and the interest rate expectations need to be met. If you keep doing what you're doing for another 6, 7, maybe 8 years, Anthony, you could fill in the exact year for me. That pension plan returns to being fully funded. And the same with the OPEB plan. I do not have what the year that is expected to be fully funded, but the 2030.
Is that the pension? That's the pension, the vote? Oh, even okay. Yeah, great.
So while there are big liabilities, the town has had a practice and a history of funding these things at the level of, we call it the ADC, or the actuarially determined contribution. You keep doing that for another 6 years, and of course the assumptions need to be met. Those liabilities become zero. With that, I'm going to turn over a couple of pages forward to the short-term perspective financial statements. Actually, it's over on print page 29. This is the page that gets the most use. Most readers turn here. They somewhat gloss over the long-term perspective. I wish they didn't, but I know the reality, and they do. Most readers focus on that first column of numbers, and Liz, if you could scroll down into the fund balance section, please. The eyes of most readers turn to that first column of numbers, and they look at the third number up from the bottom, or the unassigned fund balance, with a 6/30/23 balance of $12.9 million, or just under $13 million. I think it's important, though, to look at total fund balance, 38 million in total fund balance. 12.9 of that is unassigned, meaning there are essentially no constraints whatsoever on those dollars. Assigned is about $2.5 million. Those are year-end encumbrances for the most part. Also, some free cash that was used for fiscal year 24. Above that is your committed fund balances. A lot of that is your stabilization accounts. And the restricted fund balance of 10.6 million. That's the pension reserve fund that you track any funds separate in your general ledger. However, accounting principles, that's one of those differences between the DOR's prescribed methodology for accounting and GAAP. So your pension reserve fund gets blended in, if you will, with your general fund, and that's the restricted amount. For anyone who's interested, I'm not going to turn to it, but page 73 of your footnotes has a lot of detail about the individual fund balances. It will tell you the purposes of each of those dollars. But focusing back on the $12.9 million, it's a point of reference that's increased from June 30, 2022 to June 30, 2023 by about $2.4 million. Also, that $12.9 million represents a little bit less than 11% of general fund expenditures that occurred, or pardon me, that were recognized in fiscal year 23. And that's certainly a percentage that, is consistent with peer rated communities. You know, AAA rated communities will often have, at least 10% of their annual operating expenditures in unassigned fund balance. Well, further, I would just point out to the committee that, some rating agencies, not all, but some rating agencies look at committed, assigned, and unassigned, and they call that the unrestricted fund balance. That's not a technical term in GAAP, but rating agencies look at the combined amount there as unrestricted. It certainly shows excellent liquidity for the town's general fund. I'm gonna talk a little bit more about this page, and then I'm gonna turn back to print page 20 in the MD&A. When I go back to page 20, what we're gonna look at is something that the town put in its MD&A. Most readers want to understand why that unassigned fund balance, again, the June 30, 23 balance of 12.9 million, indicated it went up $2.4 million. You wrote a sentence as part of your MD&A that really succinctly and very clearly tells you and other readers why that key account balance increased by $2.5 million. So we'll just take one quick look at that page in a few minutes. But sticking on this particular page that's up there, and Liz, maybe if you could just scroll up to the top, back up to the top. I wanted to point out that your capital project fund, mathematically in accordance with the accounting standards, is required this year, June 30, fiscal year ended 23, is required to be reported as a major fund. That's because of the middle school project that occurred during the fiscal year. You see the balance sheet here on 29, and if you were to flip over to page 31, you'd see I'll call it the operating statement, revenues and expenditures. And also this year, your federal grant fund, that's the middle of the 5 columns that's up there. Mathematically worked out to be a major fund. If you look right in the middle there, you see it in the liability section. There's an account called unearned revenue with an account balance of $4.3 million. That, by and large, represents your unspent ARPA money, the American Rescue Plan money. Concord, like all communities, majority of communities, receive those dollars upfront. Accounting standards do not permit you to recognize that as, while you have received it, you're not permitted to recognize it as revenue until you do with it what you're supposed to do with it. And that when that money is expended on appropriate purposes, you will take that $4.3 million and recognize it as revenue when you incur expenditures that you are using your ARPA money for. And it's because of that, it's classified as a liability, is what triggered that fund to be classified as a major fund this year. And lastly, before I go back to the MD&A and highlight for you the reason why unassigned fund balance went up by 2.4 million. If we print page 35, I'm going to skip over, this deals with your enterprise funds, and I'm really going to speak about the first couple of columns, which is the water sewer funds. I'll speak about on September 11th, I'll speak about the CMLP. When it comes to enterprise funds, I most often skip over the balance sheet. And I also skip over the statement of revenues and expenditures in a governmental organization. In my opinion, the statement of cash flows, which Liz has up on the screen, is where it's at. The balance sheet becomes a little busy with a wealth of capital assets, a pension liability or a pension asset, an OPEB thing, and other accounts like that. Income statement, good information in there, but most readers that are financial institutions and credit rating agencies strictly focus on the statement of cash flows with respect to enterprise funds. And it's going to be tough to see on the screen, but it looks like many folks have printouts of this page. When I'm reviewing financial statements, I look at an enterprise fund. When I see a statement of cash flows, I look from the very top down. It's the fourth number down from the top. We will focus on the water fund column. It's the net cash provided by operations. It's net because it's the inflows of cash minus the outflows of cash for operating purposes. You generated net cash provided by operations of $3.3 million. Financial institutions and credit rating agencies are gonna look at that number and they're gonna compare it to, in the third section of this report, it's called your cash flows from non-capital and related financing activities. Look at your principal and interest payments in that section. And the question is, does the net cash provided by operations cover the principal and interest? Basically, that translates to your budgetary results of operations. You can clearly see that in the water fund. Not quite as clear in the sewer fund, but I also don't think there's a problem there. And I'll get to that in just a moment. In the water fund, net cash provided by operations of 3.3. Me as a reader, I look at the principal payments of almost 600 and interest expense of a couple $100,000. I'm gonna round up and call that $1 million. Definitely rounding up there. But does the 3.3 million cover principal and interest? Yes. That tells you there's good results of operations in your water fund. Sewer fund, if you do that same math, it's not quite as pure, but you also had some sewer tie-in fees and some capital contributions down by the principal and interest in that section of the second column in. You see capital contributions of $312,000. In this case, those inflows, those capital contribution inflows, need to be looked at as comparing net cash provided by operations plus cash inflows from capital contributions. Is that sufficient to cover your P&I payments? And when you bring capital contributions into it, it's not operating revenues, but it's certainly cash inflow that's designed to help cover debt service costs. Then you see the relationship that I've tried to illustrate today, which does net cash provided by operations, plus, if applicable, capital contributions for debt service and things like that, does it cover your principal and interest? And in both of those cases, the answer is yes. And I just think I know I'm going into a lot of detail here on reading these things, but rather than talk about unrestricted net position in the water fund and sewer fund, this really is the meat and potatoes of an enterprise fund in a governmental organization. And I've been finding, even taking a few extra minutes to highlight this relationship that is so important. It becomes a little more tangible to people. So I hope I didn't go into too much detail there. Now, I want to turn back to print page 20.
Scott, can you do one thing? If it wasn't 20, on 29, there's a line item that's under non-major government funds, but it's called non-spendable. And I think I read this in the notes, but can you just remind me what that represents?
Yeah, it probably represents a couple of things, but I suspect that the vast majority of it is your cemetery perpetual care money. That people make contributions or buy, sites.
Yeah.
Not sure what the word is there. Some of the interest can be spent, but the principal is not allowed to be spent. The interest can often be used for care and upkeep of the cemeteries. And so the non-spendable piece is the principal contributions that cannot be spent.
Okay, so and just for others, so I'm the liaison to the trustees of town donations. So these are potentially trust funds that the principal's restricted.
Yes.
In concept, that's mostly.
Yes.
Okay.
Yeah. There may be a piece in there that's also library related, but I don't know that off the top.
Okay, good. Thank you. Just
So while
you're there.
on 29, I see that Liz has gone to page 20. And this is,
Okay.
that's fine, thank you. On page 20, this goes back to MD&A, and I just want to point this out. I probably said when I was talking about the report after the independent auditor's report that the MD&A is a great resource to go back to to understand why key account balances may have changed. And right at the bottom of what Liz has up on the screen there, you see the components of general fund balance that I talked about. The unrestricted, the assigned, unassigned, assigned, committed, and restricted, comparing the 6/30/23 to the 22. What we talked about was that the unassigned fund balance went up about $2.4 million. Now, Liz, if you can, I know you're in the middle of getting some power there, if you can scroll down just a little bit to below the percentages. There's a sentence right at the very bottom there, after the percentages, and then there's some italics there that just is, you know, adds context to something. There's a sentence there, and I'll essentially read it. But what this sentence says, it tells you why your unassigned fund balance went up $2.4 million. It went up $2.4 million, was primarily driven from positive budgetary results of $4.9 million. Another time I probably would, after the 4.9, I probably would have typed in there from page 96. You could go to page 96 of your ACFR and see the budget versus actual results that generated almost $5 million in positive results. I will tell you on the revenue side, interest earnings in Concord, just like they were in most communities in fiscal year 23, drove a lot of the positive revenue results. And the balance is unspent appropriations by departments. So your positive budgetary results are almost $5 million. But unassigned fund balance went up only 2.4. That's because the latter part of the sentence indicates that you used 1.15 of overlay surplus and another $1 million of free cash for fiscal year 23 and 24 respectively. So $5 million in positive budgetary results. Use the 2 million in fund balance, the net amount comes darn close to 2.4 million. Makes my job a little bit easier when it comes really close to the change in unassigned fund balance. It doesn't mathematically work to the dollar. It's off a couple $100,000 if you were to actually do the math. It's a lot going on in there. But the bottom line is, we want you to be able to see this. And if somebody asks you, why did the unassigned fund balance go up, you can tell them it's from positive budgetary results, softened, if you will, is a word I often use, softened by the use of free cash and other financing sources that brought that $5 million down to $2.4 million. That's why it increased the way it did.
And then Scott, the free cash, that million or 1.15, is it in the assigned fund balance?
Yes, it is.
Oh, okay.
The $1 million. Let me confirm that. I think I mentioned it was page 73.
And it's represented, I guess was my.
Yeah.
Yeah.
The footnote goes between 73 and 74. If you were to look on towards the top of 74, you see $1 million in assigned fund balance. It's for next year's expenditures.
Yeah, okay.
So the overlay and the free cash are both in there,
Both.
in that number, for sure.
The overlay technically is not. The
Okay.
overlay was used, I believe, in fiscal year 23. However, this is where it gets challenging for me, but I think I can do this. At 6/30/22, you had set aside a certain amount of fund balance for the 23 budget. Whatever that amount was shown as assigned fund balance. Then during fiscal year 23, it was probably at a special town meeting, you used some overlay surplus. So that previously wasn't set aside. It was part of unassigned fund balance at 6/30/22. It was used during 23 and not previously set aside in a reserve. So that's why it had a draw during the fiscal year, even though it was used in fiscal year 23.
And then Scott, in the back on page 20, you have some good percentages here relative to that unassigned balance or the general funds. Would you say that from a Concord perspective, these are good percentages relative to our peers in other communities?
I'd say they are consistent with your peers and other systems. And I would say that they are very good.
Yeah.
I thought what you asked, good compared to your peers.
Well.
And I didn't want to say that.
Okay.
They are very good, and I think they are consistent with your peer communities.
Great. Being AAA.
Yes, that's
Okay,
exactly what I
okay,
mean.
great.
As a AAA rated community.
Okay. Great.
That's a very quick walkthrough of your ACFR. I'm gonna touch base for a couple of minutes on some management letter comments, but I feel like I'll pause here. If there are any questions on the numbers, I'll try to do my best to answer them.
Bruce, anything from your great coverage? Yeah. Brian or Ford? Any questions?
Yeah.
Oh. Did I have to raise my hand? Can't see the hand. Just to be honest. Are they all set? Okay.
Yeah, if you have a question?
Yeah, sorry. I'll have to come up to speed on some of the terminology that is very specific to the town or to towns and municipalities in general. But what would be super helpful is if there is, if we have a AAA rate, if we have any kind of a rating, then we should have something from either Moody's or S&P or maybe another rating agency that kind of reviews and presents the rating. It would be super helpful to have if that's possible.
We have that, we just got that, we found out that book. I can share that with the committee, and it'll be up on our website.
It's on the
So-
website?
It will be up on our website, the latest
Okay.
deck book, which includes the movies rating.
Okay, great, thank you.
Is that it? Okay. Well, Carla, let me just hold your comment for a second. I want to get the committee comments first. I had one question. We obviously have a lot of debt increases this year, understandably so, but we have more coming. And I'm curious to see, and if there was something on page 129 around debt ratios, which I just wanted to ask a question about the reasonableness of our debt load and if we consider going forward. I didn't see sort of debt ratios per se. But I wanted to get your sort of feedback on our level of debt and.
Certainly you issued a lot of debt in fiscal year 23 and you indicated there's more to come. And Anthony and I actually spoke about this yesterday when we just had a call in preparation for this. A lot of times, I guess this somewhat ties in with the questions that, people want to see the Moody's or the S&P report. I haven't seen the latest one here in Concord, but I suspect one of the things it talks about is not the amount of debt, but how rapidly the debt is being paid off. Generally speaking, communities, I'm gonna say, this is not completely accurate. This is very generalization. Gonna be around 70% of their debt is gonna be paid off in the next 10 years. A rating agency will look at a community and ask that question. You're not there as of 6/30/23. I think it's important that this committee know that. You issued a lot of debt in fiscal year 23. And the new debt that you issued, you didn't start paying it off until after 6/30/23. So it's all outstanding. And what did we say yesterday? 25-year debt? I could look it up.
30, I believe it's.
Yeah, it is
So it's
30. I can see.
30-year debt. And that's not a bad thing.
Right.
That's not a bad thing. I mean, clearly the community voted to do this.
Yeah.
But a rating agency will oftentimes look at how rapidly you're paying off your debt. You're not there because the voters elected to do something different. There's nothing wrong with that. I think it's important for readers to know there's a reason why you're only paying off X percent. And I don't know what that percentage is. It's not 70%. It's probably closer to 50%. Again, the mathematics can be done. It's in the footnotes. I think it's important for management to know that, be able to express it to rating agencies and financial institutions, and the committee should also understand that as well. Now, your question really was on the amount of debt in general. I've worked with rating agencies for a long time. I don't think they would look at your debt burden as out of line for a community your size. Again, I think they look at the voters who are willing to do this. So I don't think it would be looked at as a negative. Haven't seen the report. That's based on 37 years of experience.
Yeah. I'm aware that we have financial policies that say most debt is retired within 10 years. So I think I recall rating agencies looking at that very favorably. So it's just a question, I think, when we go forward and maybe something this committee wants to talk about separately, but We know it's there, and we know everyone voted for it, and it's a limiting factor for future investments.
I think I said this to Anthony yesterday, and if I didn't, I'll just say it to the committee, with 6/30/24, maybe there's someplace in the report here that we can collectively highlight this and make a statement about it.
Yep.
So that it's much like, it's right there, in black and white, telling the reader why unassigned fund balance went up 2.4 million. Another sentence in there that says, you're only paying off X% of your debt in 10 years, and here's why.
No, I think that would be a good idea in the FY24, that'd be great.
I would certainly support that.
Yep. Okay. I think you covered my other questions. I have others that will relate to the notes that you said you speak to, so.
Yeah, I got the question.
Okay. Okay, now, I'll just take Carlin's question at this point. Carlin?
Thanks, Carlin Reed, FinCom. Question, looking forward, we're going to be creating another fund called the Stormwater Fund. I don't recall if it's going to be enterprise or a special revolving fund. How will that be shown as in accounts?
That might be something that we have to address in the future. It depends on how big that fund's gonna be, right? We've broken out major funds in this report, and that's sort of driven by the finance, the funds within it. Is that true?
How big the fund is
Yeah.
in comparison to the entity as a whole? I mean, that's a
Yep.
10,000-foot answer to the question. It's a little bit more complicated than that. Stormwater, I think a decision will need to be made as to whether or not it's going to be an enterprise fund or a governmental fund. The answer to that in general is also driven by the accounting standards. Comes down to whether or not the rates and charges, are they designed to cover the full cost of operations, including debt service or depreciation?
But that'd be FY25.
Okay.
Yeah, no, it's a ways away.
Okay.
I think so. And we don't even know what the
Yeah.
fees are. We don't know the total funds yet, so.
All town meeting, it was vote to create,
Establish.
start the enterprise fund.
It was,
There,
yeah.
that's it, as far as we're not ready.
Okay.
And on, I understand that. I just would want to point out, even though it's perhaps a little bit early, if it's what I tried to articulate as far as the definition of an enterprise fund under GAAP might be different than DOR standards. If it doesn't, if the rates and charges aren't designed to cover the full cost of operations, including debt service or depreciation, then it may not need a GAAP definition, and it could be reported as a special revenue fund. Which if it's small, would be part of your non-major governmental funds. If it grew in size, perhaps it would be major. Maybe someday the rates and charges will be designed. I don't know. That's to be determined. But that's the technical definition of an enterprise.
Appreciate that. Thank you. Are there any other? Bianca.
Yeah, hi. I just had one last question on the bonds you were talking about, paying off the debt in 10 years, but we had some bonds that were 30. Are the 30-year bonds amortizing, or are they just a balloon payment and we manage the amortization schedule? Or maybe it's both. They have an amortization schedule, but we can prepay with no penalty. How does, maybe just a little clarification on that?
There is no balloon payment. The Massachusetts general laws for general obligation debt do not permit anything like that. I don't have the exact amortization schedule at my fingertips, but I can assure you there was no balloon payment.
Okay, so then we can then prepay if we had decided to pay off the debt in 10 years, we can prepay without penalty, I suppose.
The answer to that is, my answer would be probably. I think you should consult your financial advisors on that one. Also, this is outside 2.5, right?
Yes.
So you'd have to take that into consideration. Your financial advisors and bond counsel would probably be the better ones to answer whether or not you can prepay it.
Okay.
Yep. It's helpful, and just to note, there is, as you said, the statistical section of this audit has tons of information, including our future debt schedules that are out there, so
Yeah.
you can look at that as well. So, very helpful.
A couple of, towards the very end of the packet that Anthony put together is some recommendations. Maybe working from the back of that PDF that Anthony put out, go forward 6 or 7 pages to the very last report that starts on the Markham letterhead. This is our introductory letter to the management letter. I almost always try to point out that readers should look at this because it tells you what we did, and just as importantly, what we didn't do. We did not look at every single transaction that goes through the books, that went through the books and records here in Concord. With that being said, a couple of things that we noted in fiscal year 23. Print page 3 of the management letter to implement a budget reconciliation process. What we found was the budget that was reported in the general ledger was the original amount of the town meeting warrant, rather than the amount that was voted. So there was about $176,000 difference. I think that's a pretty easy fix going forward. Second one, towards the bottom of page 3, to include the trust funds in the general ledger. Town, this goes back to perhaps the cemetery funds. You're a custodian of numerous trust funds that are there's good accounting for them in the town, but they're not part of the general ledger, so they're really subject to a different set of internal controls. We're recommending, I would say, in conjunction with the implementation of Munis, the new charter account conversion in Munis, that you transition these funds from the standalone accounting of them over to the town's general ledger. At the bottom of page 3 and the top of page 3, in accordance with Massachusetts general law, the town accountant should receive all the invoices, even if they're even the ones that are paid by CPS. Prior, and they should be reviewed prior to being paid. In the middle of page 4, issue number 4 and issue number 5.
Actually, number 3, this seems like a pretty significant issue on number 3 in terms of that. So, and I assume this might, I don't know if this is going to show up on a school audit, or is this CPS or?
This includes, this audit includes CPS.
Right.
It does not include CPRS.
Okay, that's it. That was my real note. So, so this is a procedure that obviously an enhancement that can be made, and I'm sure we will.
Yeah, so I have a question about that. So we have a policy which is based on Mass General law.
Yeah.
That clearly says bills and invoices, but we haven't been following that. So that's on us, the school committee. In terms of streamlining this process, and maybe we could talk offline, can Munis handle this? Or,
So we've started the conversations with the school. One of the things that I recognized and it's identified obviously in this report, and it would be probably identified in the Collins Center report, that study that we're doing too, is that past practice with CPS was acting like a region, and that's really not the way that it goes. So I have started the conversations with the school department. And what we're hoping is we're gonna phase this in. So first of all, we have some work to strengthen the conversion into Munis. We're gonna need to do little charter accounts, which we've had the meetings and we're gonna include them in, so their charter accounts they'll be able to use Munis. So the goal would be is before this fiscal year is out, is that their system, we have a bridge to their system to our system, so that we get the data into our system. I'm hopeful that July that we could have them work into Munis and abandon their vision system, which is a Tyler product. And start being everything through the town. And then the following January, we're currently doing a payroll conversion for the town, which is scheduled for January. We need to get our act together, but hopefully next January, we talk about having the school's payroll then. So it's gonna take time to do it, but we do have a plan. Bob and I have been discussing it. It's a slow plan because of all the conversions, but we recognize this and we're working towards having one system.
and is it a Munis payroll system as well?
It's a Munis payroll system that we're going to, yes.
And many municipalities now have sort of adopted the practice, and where the town where I work, the schools use Munis as well. It's not necessarily easy every day. Yeah.
Most communities that we've worked in, they all are integrated. I'd probably say, in my experience, this is a little bit of an outlier.
Mhm.
So, but we'll
So
get
that's good, okay, so. Then is there any way to strengthen our warrants to make them better in the absence of this Munis integration? Maybe you can think about it and.
Yeah, we have a lot going on, but we can look at that.
Okay,
Certainly, the communications have improved greatly.
Yeah.
And the collaboration with the schools, so, Bob and I speak all the time, so
Right.
we're making progress, it's just. Not as quick as I think we'd all like, but
Well,
it's progress.
okay, thank you.
Great, and we'll be doing another audit, so we'll see how we're doing, so thank you for that.
The next couple of recommendations are very similar. The Governmental Accounting Standards Board, or GASB, didn't talk about them yet today. They're the ones that set the rules by which you do your accounting and financial reporting. This is through the audit process, because as I mentioned, you follow DOR guidelines, but the GASB sets the rules for GAAP financial statements. They've issued a couple of new statements, 100 and 101, that deal with changes, accounting changes and correction of an error that will impact you when you have changes in major funds. Not a heavy lift at all, but the GASB 101 is compensated absences. This will change how you need to account for your accrued sick and vacation time. Instead of being what has an employee vested, what will they receive if they were to leave on June 30, 2023? It's now, this is a generalization, it's now, what's more likely to be paid out? Will be the standard in terms of establishing that liability in your financial statements. Concord, like most communities, in my opinion, dodged a bullet. Earlier this year, I believe it was in April, the GASB put out a new standard called Improvements to the Financial Reporting Model. Talked earlier about you have long-term perspective and short-term perspective. 2 years ago, I was talking with all of our clients about that there's this major change coming. Well, it's kind of a ripple. GASB backed off, making substantial changes to the reporting model. It's not much. It's some things, but you don't really have to worry, like I may have told Kerry and some others in the community a couple of years ago, there's a major change coming. We all dodged it there. Some current year recommendations, we put in here, prior year recommendations. Utility receivable recommendation, which I indicated previously was a significant deficiency. The top of the next page is the center.
Can I just a comment?
Of course,
This reconciliation of utility receivables has been on the last 2 years' audit, so for this committee, they should be aware of that. And this was, I think, so the light plant, this is not a concern. It's really just water and sewer, right? Are they managed out of the same system? The reconciliation, so it's quite doable. It's about.
It's on the
managing-
same system, it's the same system as CMLP.
Right, so the NIS.
Yeah.
So it's doable.
Yeah, so what our goal is to fully integrate them into Munis and get the utility going. So you can expect to see capital and finance to be able to do that. So that's gonna help us greatly moving forward.
Good to know.
Okay, at the top of print page 6 is to centralize lease accounting. As I indicated, the prior page, GASB just issued a couple of new standards. A couple that were implemented both in the prior year and in fiscal year 23 was a new lease standard, a SPITA standard, SBITA, subscription-based information technologies. Fancy way of saying leases that deal with software. And then the third one, GASB 94, is public-private partnerships. The accounting here between leases, SPIDAs, and PPPs, public-private partnerships, has become a little more complicated. Really, the lease standard affects Concord more than the other two. What we have been finding is that governments are now looking to outsource the accounting for leases. There's some good service providers out there, not in the business of recommending them, but there are multiple good service providers. And what we're finding is organizations, particularly those involved with computer conversions, might be best served to outsource their accounting for their leases. Basically, they'll scan your leases and they'll put together your Excel files for you. A little more complicated than that, but that's essentially how it works.
So it's a recommendation to improve efficiency. We're able to support all our accounting at this point in time, but it's another
Yes,
investment,
we've
right?
already started looking at programs that would help us in this area. It's,
Yeah.
we just, quite honestly, we just have to take a pause because we have a ton going on.
Yeah,
So,
But you can support it today, right? It's more complicated, I'm sure.
Yeah.
It's complicated from a client perspective. Right, okay, so just want to make sure that we understand that perspective.
Number 8 at the bottom of page 6 is one that I've discussed with the committee and the community for a couple of years, is to align the encumbrance policy and the practice. You have an encumbrance policy that says one thing, what's happening in practice is really another one, is really another. You're doing something different than your practice. In practice, you're doing something different than your policy requires. Been continued improvement in the last couple of years. I probably should have talked about this when Liz had up page 20 of MD&A, when your assigned fund balance came down quite a bit. It came down quite a bit because some of those older encumbrances have either been used or liquidated. But there still is a little bit of a disconnect between your practice and your policy.
So what does the policy say, that we should close out all previous encumbrances?
I'm not totally familiar with the Concord policy, but
Yeah.
I know significant progress has been done, and I know
Right,
Terry can speak to this.
We've been working on it for a couple
We've
of
been
years.
working on
It
it, we
seems
got
like
it way down from where it was.
Yeah,
And
Right.
we're continuously, improving that, and I think this year we went through it where we have a lot less, and the ones that we're carrying over right now for our last fiscal year. There's some projects that we just haven't really invoices on and so forth, and some personnel reserve that was dependent on the merit increases that we'll point back to, so. I feel like we're in a lot better situation than maybe Concord was 4 or 5 years ago, and anything more to that.
I think the only thing that I would say is that, based on the meeting we had a couple of weeks ago, I think as we close out fiscal 24, we are in alignment. Finally.
that's great. That's good. Great.
And our last suggestion is just to analyze some withholding accounts. Withholding accounts are generally thought of as liability accounts, money withheld for health insurance and other reasons from employees. In general, the money comes in, goes out, and as indicated again at the top of page 7, we identified the town's general ledger contains certain withholding accounts with credit balances that appear to be growing rather than zero out. Not growing to a super large amounts, but maybe an indication that these aren't being cleared out on a regular basis. So we're recommending you take a look at those accounts that appear to be growing a little bit rather than zeroing out. I guess also included here after page 7 of the management letter is an email that Sarah Kodak, who is the audit manager on this account, sent to Anthony and Liz, which is just some other issues that we didn't think warranted putting in the management letter, but Anthony asked us to document them, and we think it's best just to document them in an email. And I would say in the interest of transparency, I think Anthony clearly included them in here. I honestly didn't see it until right now. But there's some things in there that, again, we didn't think they rose to the level of including in the specific management letter, but other things that we saw that we thought management should address.
I just had a question on this overlay log one, like we didn't have the details behind the use of that fund, and we're just unable to recognize it because have we changed that practice?
We're working on it.
Okay. Great, and then I have one question that's unexpected, because and it's gonna get to our second agenda item. There were issues from the FY 22 audit. Many of them are still here. but there were two that weren't, and I just want to ask about them just generally, and I respect that nobody else has this information because I asked Anthony to give me that letter. He can send it to the rest of the committee. One of the recommendations was to improve the year-end cutoff procedures. I assume that that happened because it did not appear again here in this audit. Is that a fair statement? It didn't show up in 23's audit, so I assume it's not updated. Yeah, this is something that was in the 22 year-end audit, but did not appear here. So I just want to make sure that, in your opinion, that's not.
We did not find any exceptions in our, what I would call our cutoff testing.
Okay, okay. And then you had a recommendation to prepare for GASB 94, 96, which I think we covered part of that in here because it's similar to the lease.
It's similar to the lease standard and you implemented it.
Yep.
Not a lot of it was applicable.
Yep.
And we actually found that was very much the case, not just in Concord, but in a lot of places. Some larger cities are more apt to have PPPs or public-private partnerships. But yeah, we covered it when I was talking about the recommendation to consider outsourcing the lease standard.
Yep.
Those outsourcing providers will also track their speeds, which are nothing more than leases about software.
Yeah.
When GASB 87 was written, it explicitly exempted software. And then, this is my opinion, a year later, GASB said, we shouldn't have exempted software, so they were new standard.
Okay, that's great. That's helpful because it plays into the other agenda item. All right, so are there any questions on those notes from any of the committee members? This looks like this is all. Any other questions? Anyone online with questions relative to this recent discussion on notes? See any? Okay, I see something. But not the next.
I would simply note that once again, this looks very comprehensive, and Scott, I think we've benefited greatly from your history with us because we've learned your way of presenting, and it's been very valuable to us. So thank you.
Thank you.
No, it's been. You do a great job of covering all the details, the pertinent facts, and great, again, thank you for giving all this information in advance and being very transparent and giving every piece of detail that we can make it. Which is great. So for this committee and within the agenda of FY23, there was, we talked about this, obviously, the notes and the recommendations from the auditor. There is a draft letter that we'll need to prepare as a committee for the select board. And I will take responsibility for putting that together. And it's predominantly driven by the notes and recommendations that come through. So I'll take the lead in doing that. And I think at the same time, the second agenda item talks about FY22 audits. I don't think we really need to go through that by talking about the former notes on that 22 audit. It would be my intention that we could probably combine a notice to the select board before 22 and 23. So I'll take the lead on doing that. Follow the details that are needed. And in our next meeting, we'll review the draft of that.
So it just seems like we're gonna have a heavy list for that next meeting, so I'm just wondering, just think about it.
No, I think so.
Because we're doing two.
Right. So, yeah,
Just think.
No, that was my concern too. I think, most of what I see in the letters is gonna be a lot verbatim of what's been already published. I don't see any, or we didn't have any other discussion about other concerns. I will note though, that in particular, the discussion we had around schools control too, because that's important. That would be in there, so.
Because we could do the Zoom meeting, maybe just to review the report. That's an option.
Yeah, we could do that.
Because we wouldn't need a lot of
Right.
personnel there,
Yeah,
per
so
se.
we would have to go to that.
Right?
Right, yeah, no, we could do that. We could have a separate meeting on
Yeah.
that if we needed to.
I just see a question.
All right. Does that committee feel that that might make the most sense? Just have a quick meeting just to recap the letter?
Mhm.
We would have done it.
Work for you, Bruce?
Yeah.
Okay. Be a quick meeting. Oh,
Right.
okay. All right, so we'll work toward trying to schedule that.
Yeah.
That's great. And I think we've got a set date for our next meeting tentatively, which is great, and we'll focus on trying to do both the CMLP and the region audits. In all honesty, too, those are less complicated audits, so you don't have the same information, so. All right, anything else the committee would like to raise? Issues? Okay, so I think I'd like to have a motion to adjourn the meeting.
So moved.
For a second, I think we have to actually vote this one, so I have to do a roll call, Cynthia.
Aye.
Bruce. Bianca,
Yes.
Cord,
Aye.
Brian,
Aye.
and Wendy. Aye, so we are officially adjourned. Thank you all. And Scott,